Greetings. Welcome to my weekend market recap, 1st of April 2023. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle superiorprofit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It's not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems in my trading. All the Q components run on the Metastock platform and the technical analysis component runs on TradeStation as well. That was the last slide of the presentation. Let's start with the live systems, starting with a look at the global markets. First, Australian index, all ordinaries. For all the markets, I ask myself two questions. One is, what is the direction of the market, and then what is my preferred trading direction? They may not be the same. What is the direction of all ordinaries? In the weekly, it is moving inside a range, the range created by trendline resistance and also watermark resistance, and trendline plus watermark support. In the weekly, it is right in the middle of the range. Weekly interval is longer term. If we decide our swing trades based on daily interval, what is the direction in the daily chart? There also it is inside a range. The upper end of the range is created by trendline resistance and watermark resistance. The lower end is created by watermark support. It is in the middle of the range. Middle of the range in daily is a no trading area. In addition to that, it is right at trendline resistance. That is an area I don't like to buy any instrument. I may wait for it to decisively break out and then look for a low risk entry point. I'll not buy when price is just below trendline resistance. And even if all ordinaries breaks out next week out of the trendline resistance, the recent low will be far away. I'm not going to find any easy low risk buying opportunity using daily chart. Now looking back, it's always a good exercise, useful exercise to go back and see when we could consider starting to look for stock buy candidates. That would be when we had the bull release signal in daily that came at the watermark support, creating a double bottom. Now if we look closely, that candle itself had an upper tail. So the candle shape as a whole was indecisive. There was no box long trade setup in all ordinaries on that day. So though we had the bull release, we would not buy the instrument. Then we could keep an eye on all ordinaries, and on this day we had the first bullish color candle, and that candle closed with a bullish shape as well. So if we look back, in conclusion, that was the day you could look for low risk buying opportunities in individual fundamentally strong stocks. That is the Q approach. buying at lower risk entry points and avoid buying higher risk entry points like it is right now, being just below trendline resistance. And though I am looking at multiple instruments from multiple countries, the same approach is applicable to all stocks, all liquid stocks in all countries, including, of course, the USA market. So in summary, all ordinaries is moving sideways plus just below trendline resistance, and it's in the middle of the range. So there is no preferred trading direction. I will stand aside. Next, let's look at Japanese market Topix index. Here the weekly is bullish. Daily had a wild swing. What is a wild swing? That is an area where price moves from above the upper boundary straight to below the lower boundary. Above the upper boundary, straight move down to below the lower boundary. That's a wild move area. After that, it has recovered. It is too far away from the recent low, so I will not like to buy now. If price comes down little bit and goes up again, that will give the next trend following buy setup. Right now, because of the wild move earlier, the direction is not yet clear. It will be clearer if we have a higher low and price starts to go up again. That will be uptrending again. That will be the point I will look to buy. Now there is no clear direction in daily because of the wild move. So I'll stand aside again. What about China's CSI 300 index? What is the direction? It's non-directional. It is moving inside a triangle in daily created by trendline resistance and trendline support. So I will not buy or short now. Now it is at the upper edge of the triangle. Normally I say that if a stock or instrument reverses from upper edge of the triangle, I look to short. But in this case, even if we have a down day that will confirm reversal from the trendline resistance, that will bring us too close to the trendline support. So we will not be having low risk shorting point. Looking at the narrowing triangle pattern in daily, the only safe way to take a trade is to have a decisive breakout in either direction and then look for individual fundamentally strong stocks on the bullish side. If it breaks to the upside, fundamentally weak stocks giving low risk buys, low, fundamentally weak stock giving low risk short setup if it breaks to the downside. Right now I will again stand aside. Interestingly, so far we looked at three global markets, non-USA global markets, and all of them are telling us to stand aside. What about India's Nifty 50? What is the direction? Here the direction is downtrending, is not in a range. It has cleared lower high and lower low. After displaying a series of bullish indecisions, as we would expect, it recovered somewhat. Friday we have a very bullish shape, bullish color candle. The weekly candle is also bullish in shape. Weekly also has a bull release signal. Daily has a bullish flow. On top of that, we have big move up 3 in daily. However, this big move up 3 did not come at price extreme low, neither did it come at jump thrust low. So this is not representing one of the reliable patterns that I discussed earlier. And also it is still in a downtrend. Therefore, there is no Q buy setup in Nifty 50 itself. If anything, I will look for a short setup if next week in the beginning we have a down candle, bearish flow candle or bearish traffic light candle that will show that price is reversing down from trendline resistance, and I would like to short at that point. Why? Because that will give me low risk entry opportunity. Will I short Nifty? I like not to trade the indexes so much. I do trade the future sometimes or options and futures sometimes, but I prefer to drill down in the constituent stocks. I look for weak fundamental stocks that are also giving low risk short entry setup if Nifty comes down next week, and I will prefer to trade those stocks instead of the index itself. So far we don't have a single global market where I would like to buy. Last global market that we study is UK's FTSE index. Same conclusion. Daily is inside a triangle pattern. Price is in the middle of the triangle pattern, that is a no trading area. Even if price comes down, we will not have easy shorting opportunity soon because there are multiple trend line supports. On the upside, it has to break out of this trend line resistance before I can look to buy. So none of the global markets are telling me to look for buying candidates in terms of stocks. And that is the market level analysis. What about the USA market? USA market recovered somewhat, and if you watched my last market recap and probably the one before that also, the videos are on YouTube channel. They are always there. You would know that there was a pattern on Q global market breadth that I was waiting for, and that indeed came on Wednesday. That is why Wednesday in terms of market breadth was the day to start buying. I will look at that market breadth signal, very powerful and useful signal. But before that, let's look at the external view from Q Global on Metastock. I'll switch to Q Elite on TradeStation for looking at the external view using market ETFs. First, SPY. SPY is inside a range now. Too close to the trendline resistance for me to buy. The trendline resistances are there in both weekly and daily. Range bound and too close to the upper edge of the range for me to buy. Yes, Friday was very bullish, but as I mentioned, Wednesday was the day to look to buy stocks. If you look at the SPY itself, you could see it recovered from below the lower boundary, pulled back, created a higher low with a bullish flow candle, and then went up again. In terms of external view, you could look to buy on this bullish flow candle, external market ETF view. And in terms of market breadth, the internal health check view, that signal came on this Wednesday. Those could be the buy points for individual stocks. I would not like to buy at the close of Friday. That's how, if you see my style, the Q guidelines is this at the same, that not buy stocks when it has already gone up. Probably everybody is noticing it. We have very low risk entry points defined, well defined, unambiguous checklists are there for all the setups. We have those low risk entry points and I'd like to buy at those points or short at appropriate points. SPY no trading now as of Friday's close. What about QQQ? This was the strongest and this is still the strongest of the market ETFs. It is in clear uptrend. In daily has only trend line support, no trend line resistance. It did stop at the watermark resistance. Stop, moved sideways for a while. On Wednesday, we'll see later that Wednesday we had a market breadth signal to buy. On Wednesday, QQQ gave a bullish flow candle and then it sharply went up. Now it has broken above the watermark resistance. It is clearly bullish in both daily weekly. Do I like to buy at the close on Friday? No, that is not my style. I would have bought on Wednesday when QQQ had the bullish flow and also we had the market breadth buy signal. Now it is above the upper boundary. The recent low is too far for me to buy. If you look, Wednesday would be the low risk entry point using bullish flow. In fact, it also gave us a flow by setup. There is a distinction between signals like this flow tick signal and the setup. The setup uses the signal and it has other required checklist conditions. So we see that it not only gave a flow signal, also it gave a flow trade setup on Wednesday. And weekly was already bullish in color, so that met the requirements of the flow trend following buy setup. Would I like to buy QQQ? No. There are many constituent stocks in QQQ. I could buy those stocks that were fundamentally strong instead of buying the average of 100 stocks. That is QQQ. So QQQ is bullish but overbought. What about DIA? DIA is also inside a triangle pattern. Right in the middle of the triangle pattern, recent low is far away. That's a no trading area. I would not like to buy or short. Interestingly, if we look back, the bullish headwind once again alerted us of a possible recovery. And as I have repeatedly said, what is the preferred trading instrument for headwind trades? That's not the ETF or the stock itself, but for me it is options vertical that are defined risk strategies and where we don't have to get stopped out by whipsaw. So the bullish headwind trade, if anybody had taken that, has already given very large profit relative to risk taken in the trade. DIA itself as of Friday's close, no preferred trading direction, and the last market ETF we study is IWM small cap ETF. Notice once again the bullish headwind. You know, when the bullish headwind comes, people are very negative usually about the market because the headwind comes at the bottom, near the bottom. Came here also in the weekly chart. People are afraid to buy, but that is okay. If you took a bullish options vertical trade using short put vertical or long call vertical, you would not get stopped out even by this whipsaw and price went up again, so you would have significant profit by the close of Friday. And if you had used, as I would prefer, short put vertical, time decay as well as volatility as well as delta move would be in your favor. That's why you would end up having a reasonable percentage gain by Friday's close. As of Friday's close, do I have any preferred trading direction? No. It has a trendline resistance at the top, has watermark support at the bottom is also kind of range bound. Right in the middle of the range, that's a no trading area. So interestingly, though Friday itself was quite bullish and the week was also bullish, as of Friday's close, there is no low risk entry opportunity in any of the market ETFs. As I mentioned, Wednesday gave us a market break buy signal, and if you look, we saw that in QQQ also. In IWM also, Wednesday gave us a bullish flow. See the difference between QQQ and IWM. IWM gave a bullish flow signal, that is a bullish momentum signal on Wednesday, but it did not give us a trend following flow buy setup. But QQQ gave us the flow signal as well as QQQ gave us the flow setup also on Wednesday. So Wednesday I could buy small cap stocks as well by drilling down into IWM constituent stocks. Friday I would not like to buy. Interesting, isn't it? And probably at the close of Friday, many other people are turning bullish, but I am standing aside. I will later look at some stocks that I analyzed and shared publicly. Sometimes I mentioned why I would not trade them, and sometimes I mentioned how I would trade them. I will review those stocks. Some of them I shared in the previous market recap, some I shared during the week on Twitter and or my website. But before looking at how I analyzed those live charts, let's look at the market internal health check. USA market breadth total view, a single chart, internal health check view of the market. Everything on this chart is about market internals, nothing is about an individual instrument or stock. If you look back, watch my previous videos, you would know that I was showing that the yellow line here, that is percentage of stocks above 50-day moving average, was already starting to go up with higher high, higher low after it hit the oversold level, that is the red threshold line. So that was the time you could look for reversal trades. Now it has gone up further. It is still below the 50% level. What does it show? It shows yet again that using Q analytics, we could look to buy when the market is oversold. We could look to buy when the market is trending up as well, but we can also start buying when the market was oversold. Now, in terms of growth versus value, it is still going up with higher high, higher low, though the rate of going up or the slope of the line has reduced. In this area, the slope was higher, so growth was a lot outperforming value. Now it is still going up, growth is still outperforming value, but the slope has reduced a lot. That's not a good sign in terms of buying growth stocks. What about small cap versus large cap? The slope was sharply declining here, so the small caps were hugely underperforming large cap. Now it is still going down, but the slope has reduced, so small caps are starting to fare better, relatively speaking, compared to what they were doing earlier. But we will need this line to go up, creating higher high, higher low, to be confirmed that small caps are outperforming. They are not yet outperforming. Kind of flattish, flattening out at both the growth versus value and small cap versus large cap. We'll see what happens next. Now, in terms of Wednesday's signal that I said, that was the bullish signal in terms of market breadth that I anticipated earlier. If you see my YouTube videos, market recaps, when I saw this down arrows that came near the bottom after a swing low. Those are bingo signals. That's a name, bingo, given by Mr. Ian Edward, who invented it. May him rest in peace. How I interpret the bingo signals: if they come near the market bottom, and they often come near the market bottom. Now, do I know whether it's a market bottom? No, but I see whether it has come after a drop or not. In this case, it came after a drop. Then we had the bingo, and the bingos are interpreted by me at least as sell everything, even those of value. Another way of putting it in words is throw the baby also out with bathwater. And when the bingo comes, I don't look to buy, and that's what I mentioned in the market recaps on this week and probably previous week also, that I was looking for a large accumulation count, green count. That is what came on Wednesday. If you see, after this decline and this sideways move, after the bingo signals, after the phoenix, also a bearish momentum signal, after all these bearish sell-off counts, distribution counts, Wednesday was the first day we had a large accumulation count of 4 and we had the Eureka signal both. Usually the accumulation counts come at the same time or before the Eureka signal. That's a little bit faster but very reliable signal. And though both of them came together on Wednesday, that's why I mentioned Wednesday was the day to start buying in terms of market breadth, and you could get ready with some stocks looking at the bingo and the phoenix and look out for the Eureka and accumulation count in advance. Then you would be able to trade confidently on Wednesday without worrying about the news. Now it is looking bullish in terms of market internal health. Is it overbought here? 3-month new high low. It has moved up from the oversold area, at which point the yellow line was also at oversold area. Now it has moved up to the upper half, that is bullish, but not near the upper two parallel lines, that is it's not overbought. From oversold it has turned bullish, not overbought. Oversold, bullish now, but not overbought. That's the time to buy. But the external view analysis showed Friday was not the time to buy. Wednesday could be the time to buy. Now, what about the other market angles? See, I am still looking at the market. What I say to traders, that if you are correct on the market, you can be sloppy on other aspects to some extent and still get away with that. What do I mean by get away with that? You can still make profit. However, I also mentioned there is one other area where you may not be sloppy. If you are sloppy in that area, other than market direction choice, you will not make profit in the long run. That is risk management. Risk management and accurately assessing market direction, these are two very essential parts of trading profitably. Now, what about the market sector industry stock breadth? This is a view from QEdge. Monthly view, everything is color coded, is still bearish long term. 10 days also long term, but that has turned bullish. Sector industry stock advanced decline breadth. 5-day is this week, that is bullish. Medium term and short term, 2-day, 1-day, both are also very bullish. Again, Friday I was not going to buy. Wednesday, that is not even over 2-day period, somewhere in this range, Wednesday was the day to buy in terms of market health indicator and also in terms of flow indicators coming in multiple market ETFs. Now it is looking very green. Is it overbought? Now if we look back, let's put everything together. When we looked at the market ETFs other than QQQ, all of them are range bound, and it is not at the upper edge of the range yet. Therefore, it cannot be overbought in terms of external view. It is right in the middle of the range for all the market ETFs other than QQQ, which is not range bound. So it cannot be overbought. That was based on external view. In terms of internal view, we saw it is not overbought because percentage of stocks have 50-day moving average not hitting upper threshold. Also 3-month new high low not hitting upper. Nothing is overbought. And in terms of bucket analysis also, that is percentage of stocks above upper Bollinger Band, that is also not overbought. It becomes overbought when the percentage of stocks above upper Bollinger Band, that is in the bucket of greater than 10, hits 30 to 40% level. Now it is at only 12% level. So it still has long way to go before being overbought. Is it bullish? Yes, now it is bullish because 75% of the stocks are above mid Bollinger Band. So it's bullish but not overbought. We get that confirmation from bucket analysis also. Now let's look back again. When was bucket analysis oversold? When the percentage of stocks in the lowest bucket hit 30-40% level. And if you watch back the previous videos or my Twitter or my Twitter sharing, you would know that when it hit 40-50% level, I alerted right at that time that that was too oversold. That was the time to look to buy beaten down fundamentally strong stocks. From 50%, I remember on real-time basis, all these tools run in 100% real-time mode also. In real time, I saw this percentage, that is percentage of stocks in the lowest bucket, less than one bucket, that is percentage of stocks below lower Bollinger Band, hit 50%. And since then, it didn't go up. Now it is at below 1%. So a lot of stocks has recovered from below Bollinger Band to, in fact, it has moved above the, from below lower Bollinger Band, it has moved above the mid Bollinger Band. That's a strong recovery. Now remember, mid Bollinger Band is a neutral point. So not necessarily a lot of stocks turned into uptrend. Some stocks might have turned into uptrend, but a lot of stocks, what it shows is lot of stocks recovered from below Bollinger Band low, and we have very reliable reversal setups. We could use those reversal setups to buy fundamentally strong stocks at that point, at which point when the percentage of stocks below lower Bollinger Band hit 30, 40, 50% level. Now it is bullish but not overbought. What about technical breadth? Technical breadth is the balance between bulls and bears using Q Finder. The weekly interval is very bullish across all categories. All signals 96% bullish, strength signals 96% again bullish, trend continuation 97%, and reversals even 95%. Everything is very bullish. Now it is so bullish you could start to wonder if it was overbought, but no, because it was too oversold. This bullishness does not represent overbought condition. We can get that statement's confirmation from the daily view. From where? From the price level of all the bullish signals. Majority of the bullish signals are coming, majority of the bullish signals in the daily interval, that is the primary interval for swing trading, they are coming from the yellow area, that is the price level middle. That is why it's not overbought. It will become overbought if majority of the bullish signals come from the green, that is price extreme high level. That is not the case. That's why it's confirming that yes, it is very bullish in weekly picture and even very bullish in the daily picture in terms of Friday's technical breadth, but it is not overbought. Still, the view based on external market ETF analysis, that's my view at least for my own trading, that Friday was not the day to buy, though it was very bullish day. The day to buy using Q guidelines was Wednesday. Now I may or may not look at some stocks using the live systems, but let's look back first and see how some of the trades I analyzed earlier did. Again, the point is not to show that all trades made profit. The point is to apply a disciplined systematic approach and gain the confidence, build the confidence to keep on following that approach over and over again to have reliable results. Now let's look at some of the stocks. Hope. I remember in the last market recap, I looked at Hope and I concluded after the analysis that though there was a bullish headwind signal, remember I mentioned earlier there is a distinction between signal and setup, and if you watched or rewatched my last market recap last weekend, you would see that I looked at the bullish headwind. However, after applying the checklist conditions, I concluded that though there was a bullish headwind signal, there was no bullish headwind by setup. There was no setup. So what was the appropriate course of action? Keep an eye on the stock to see if it has a proper buy setup. And in this week, for the last 5 days, there has not been any proper Q buy setup in any of the Q setups, whether headwind or bounce or box, etc. So we may keep an eye on the stock but not buy it. Not buy it until we have a proper buy setup. So that analysis worked well. Again, this is not a stock I bought, or this is not a stock I suggested buying. This was a stock I suggested keeping an eye on for a proper buy setup, and that buy setup has not come. Now, one stock I mentioned during the week, I think on Twitter, when the market was looking bullish, I mentioned about this stock DHI, saying this is not a stock I would like to buy, even in a bullish market. And the answer is there in several areas on the charts also. And also in terms of fundamental scorecard, if I remember correctly. Let's look at the fundamental scorecard for DHI. I analyzed DHI, shared the public analysis on Twitter and also on my website. I saw DHI, a home building stock, is overvalued. Also, it is having negative earnings growth. If you see quarterly earnings growth year over year, steadily coming down. Quarterly revenue growth year over year is also steadily coming down. Fundamentals are telling me from all angles, all these angles, that it is not a stock I would like to buy. And this is one approach I apply consistently. Whether the stock ends up going up, or not is a different thing. I'm not going to buy a stock like this looking at its fundamentals. And if I look at the technicals also, it is range bound. That's why I mentioned that even if the market is bullish, this is not the kind of stock, neither in terms of fundamental nor in terms of technicals, that I would like to buy. Instead, if it broke below the trend line support, I would like to short, but it will need to break below the weekly trend line support. In daily, there are so many trend line supports, it will need a while for all of them to break down. Probably it will break down only if the weekly trend line support also breaks down. So I may short then, but I'm not going to buy now. Those two stocks I analyzed earlier. Now another stock, see the different ways of using these AutoSmart memory trend lines. Micron. Micron is a semiconductor stock. Right when it came near the trend line resistance, I think I tweeted about it. Let me see. Yes. And I am always sharing this before knowing the results, be it on Twitter or on my website. See, on March 30th, in the morning session itself, I saw and shared that Micron MU came to the upper edge of the sideways range. What is the trading strategy? If an instrument comes near the upper edge of the sideways range, look for short setup. And it precisely reversed from the trendline resistance. You could use the intraday fine-tune chart to look for a very low risk shorting opportunity. Also, I noticed on the chart, didn't put it in words in the tweet, it was hitting the jump thrust high, nearing the jump thrust high. That is a overbought condition. That was another reason to look for a short setup and not buy at least. We never want to buy at the upper edge of a sideways range. We don't want to buy when price is just below trendline resistance. And see, I shared it in the morning session on March 30th. And I followed up with a tweet on March 31st, also in the morning session. That was Friday. On Thursday, I tweeted my initial observation, and on Friday, it had a huge gap down move. But remember, what happened on Friday? The market was very bullish. Market was very bullish. QQQ was super bullish. All the other market tips were also very bullish. But Micron, a technology stock, well-known stock, hugely gapped down right from the trendline resistance. That once again shows the value of not buying something right below trendline resistance. Instead, using the concept of shorting at the upper edge of a sideways range, you could look for shorts. You could use options vertical. Those are defined risk strategies. I prefer them for reversal setups, and Micron has liquid options. You could take the trade. As it gapped down, you would have significant profit. Price also came near the trendline support, so you would not wait, you would book at least partial profit without waiting. That is how I analyze, and if I can do the charts and the fundamental scorecard, industry sector scorecard, all are unambiguous, you could also do that at least as good as me, I think, because I'm in the opposite time zone to the USA market. Many of you are in the USA time zone, you will find it easier to do the analysis in a timely manner. So that was Micron. I talked about it on Twitter. And another stock, see, once again, today probably is ending up being a session about how to use the trend line supports and resistances in different way. Tesla. Let's look at the tweets that I shared before knowing the results. This was the first tweet I shared about Tesla this week. I shared it on March 29th. Remember, March 29th, right? What was March 29th? That was Wednesday. What did we see and what did I mention? That Wednesday was the day to look for buy candidates based on market breadth, accumulation count, based on Eureka signal in market breadth, and also based on flow signal in market ETFs, multiple of them, including IWM and QQQ. However, at the same time, I also shared a chart of Tesla in the morning session, and I mentioned that though Tesla opened with a 2% gap up, it is both at weekly and daily memory trendline resistances, weekly and daily both. it may be safer not to buy, and buy it only after it has decisively broken above the trend lines. So this is, see how I am looking at the market breadth to look to buy stocks, but at the same time avoiding buying stocks that are just below trendline resistance. So this is what I shared in the morning session on Wednesday. And how did Wednesday close? See, Wednesday, once again, it is a market breadth, it is a bullish flow. It was bullish day, but Tesla, I shared it after the market close in the early morning hours on Wednesday. Sorry, early morning hours, March 30th. So that will be Thursday. So after market close on Wednesday, it did not break above the trendline resistances, neither in the daily nor in the weekly. It did have a bullish flow, but we take into account all the aspects of Q signals and trading strategies. Because it did not decisively break out of the trend line resistance, we would not buy. I would not buy. But you could keep an eye on the stock. Why? Because if the breakout happen, we have trendline support that could give a low risk buy point. See my next tweet. This is Friday midday. So we could buy the stock on Friday. Why? On Wednesday, Thursday, we were already looking for a breakout of this trendline resistance in daily, but it did not. But on Friday, it opened with a gap up. So at the open itself, it broke out of the trendline resistance in daily, and then in the 5 or 10 minute in the morning session, I'd like to use 5 minutes chart here. For the tweet, I'm using 10 minutes chart. Once it gapped up at the open and it broke above the trend line resistance at the open, would look for a breakout long setup by using the early range breakout. The entry could be taken at this point, putting stop just below the day's low. The stop was never even approached. As of this time I shared it, that is as of midday 12 p.m., it had sharply gone up, covering much more than the risk distance. So by this point itself, you could at least book partial profit if you wanted, or you could just apply trailing stop to make sure it was a guaranteed profitable trade. I think Tesla closed even higher. Let's look at Tesla. Let's look at its intraday chart, the one that you could use to take the trade on Friday. Now see again the chart as of the day's close. We would have bought, let me change it to 5-minute interval. In the morning session, that's my preferred time interval. We could buy here when price went above early range high after it gapped up at the open that cleared the daily trendline resistance. So our stop would be here. This was our risk amount, and this would be our reward at the close. Very large reward relative to the risk. You could trade it in multiple ways. If you took the trade using stocks, this is what I always mention. If you took the trade using stocks near the market open after it gave early range breakout signal on Friday, you could close the entire stock position with a profit and use part of the profit to take an options trade, probably using options vertical. I don't like to buy naked options. You could use options vertical to make it a guaranteed risk-free trade from Friday's close onwards. Will I buy at the close of Friday? The answer is once again in the daily chart. Where is it at the close on Friday? Right below another next trendline resistance, and again that trendline resistance is there in weekly also. Just for the reason I would not buy on this day or on this day when it was below some daily trendline resistance and some weekly trendline resistance, At the close of Friday also, I am not going to buy. But at the open on Friday, using unambiguous signals, you could confidently buy. Why confidently? Firstly, because the signals were unambiguous, and of course, very importantly, the risk was very small. That is how I look for buy setups in advance. I look for short setups in advance. I look for the market being bullish in advance, and when the signals come, I can click the mouse button to buy or short more confidently. All I need to check is that everything is turning out as I expected or not, and it can happen in either direction, bullish or bearish. Now, I spent a lot of time this week explaining different ways I analyzed the stocks and how it could be traded, and I shared stocks that I analyzed before knowing the results, and I shared them publicly. Now, am I going to look for buying or shorting candidates now? I don't want to actually, because based on my market external view, my preferred trading approach is to stand aside. And if my own preferred approach is to stand aside, why will I want to suggest any trade or look for trades in a public webinar? That's not my approach. I am not encouraging over trading by any means, and what I don't want to do myself, why will I share that? That is one reason I spent more time explaining the techniques. So let's end today's session here. The technique is in fact more important. Once you have confidence in the technique, you can find stocks yourself. You don't have to wait for me to find trades, though I do share trades when I find them sometimes publicly. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session, which will most likely be next weekend. I will again share the date and time on Twitter as usual. Have a great weekend, and as these live examples show, and as I always say, there is no reason not to do that. Trade profitably. Thank you.